Hello CMA students, especially final students. Recently, ICMAI has introduced tax audit chapter for final direct taxation. Today, I am going to thoroughly discuss about tax audit chapter. See, this is the material for tax audit chapter. I have given this material as a link to this YouTube video. The material is available in my Telegram channel. You can access and download the video. Now, sir, why tax audit chapter is suddenly introduced in CMA final direct taxation? Because nowadays, Institute of Cost and Management Accountants of India, it is fighting very hard to get tax audit signature even for cost accountants as well. So, like you have to be prepared to do tax audit. You should have sound knowledge about tax audit. That's why for all CMA aspirants, CMA final students also, tax audit chapter is introduced. Okay. So that is the reason why this chapter is being introduced. I hope my voice is audible clearly. Now, let us see what tax audit is all about. And as ICMA wants tax audit signature for cost accountants as well, it is fighting with Ministry of Finance. In upcoming December 25 attempt, I am hoping at least some questions will be asked from tax audit chapter as well. Maybe one descriptive question may be asked 7 marks, or at least 2 MCQs can be asked from this chapter. So please listen thoroughly till the end, you will understand. Okay. Now shall we start discussing tax audit? See, before we discuss tax audit, you should have very good knowledge about PGBP provisions. Because in tax audit, what tax auditor will do, like he will verify all the accounts and he will see whether tax compliances are properly met or not. In PGBP, what we will do? We will do calculation. We will take net profit as per Companies Act or net profit as per accounts as base. We will do some adjustments. There will be some disallowed expenses. We will add back. There will be some disallowed incomes. We will reduce. There will be some additional expenses allowed as deduction that we will reduce. So, like if TDS is not deducted for non-resident, 100% of the expenditure is disallowed. If TDS is not deducted for resident, then 30% of the expenditure is disallowed. So wherever the expenditure is disallowed, all those points tax auditor is required to report while preparing the tax audit report. Okay, so we are going to discuss when tax audit is applicable and what is the tax audit report, how many clauses are there in tax audit report. All this we are going to discuss very clearly in this video. First of all, section 44 AB, audit of accounts. So who are required to get their books of accounts audited under Income Tax Act? Where it was said in section 44 AB. So what section 44 AB is telling? Section 44, in case of business SSC, tax audit is required for all businesses if turnover is more than 1 crore. Sir, what do you mean by this? Let's say there is an individual, his name is Priyatam. Okay, he is doing 2 businesses. Let's say he is into cotton business. Cotton business turnover is 70 lakhs. He is into chocolate business also. In chocolate business, turnover is 60 lakhs. Individually, turnover is less than 1 crore. But what the provision is, as per the provision, in case of business SSC, if turnover is more than 1 crore, then tax audit is applicable. Now, the confusion is, sir, do we need to check turnover for each business or do we need to check turnover for all businesses? The answer is, you need to check turnover for all businesses. All businesses together turnover is 130 lakhs. which is more than 1 crore. Therefore, tax audit is applicable under section 44AB. Tax audit is applicable. Now, sir, whether tax audit is applicable only for cotton business or only for chocolate business? No. Tax audit is applicable for cotton business as well. Tax audit is also applicable for chocolate business as well. Are you able to understand? That means what? First, if any client comes to you, ask him how many businesses he has. Take all the businesses, turnover of all businesses, aggregate turnover of all businesses. If it is more than 1 crore, then tax audit is applicable. So please remember, 1 crore limit is not for each business, it is for all businesses together. If aggregate turnover of all businesses is more than 1 crore, then tax audit is applicable. Are you able to understand? Till here, did you understand? Everybody? Next. If below conditions are satisfied, tax audit is required if turnover is more than 10 crores. So, what he is saying, generally turnover limit for applicability of tax audit is 1 crore. But there is one exception. Here, two conditions are given, condition 1, condition 2. If both these conditions are satisfied, what is the conjunction? Conjunction is and. If both the conditions are satisfied, then in place of 1 crore, turnover limit is 10 crore. Are you able to understand? So, let's say a business person came to you. Businessman came to you. Now you have to ask him two questions. Question 1, aggregate cash receipts. Aggregate cash receipts. Aggregate cash receipts of all businesses is less than or equal to 5% of total receipts. Question number 2, aggregate cash payments of all businesses. All businesses. If it is less than or equal to 5% of total payments. You need to ask both these questions. Conjunction is and. If both conditions are satisfied, that means if both conditions are satisfied, C1 and C2 satisfied, in that case, turnover limit is 10 crore rupees. If answer is no, that means if C1 is not satisfied or if C2 is not satisfied or if C1 and C2 are not satisfied, in that case, turnover limit is 1 crore. Did you understand? So, here important, what is important is when you are checking these two conditions for chocolate business and for cotton business, for both the businesses, in both the businesses, whatever the cash receipts are there, you have to take the cash receipts for total cash receipts. Okay, so you have to take aggregate cash receipts of all businesses. So don't check individually, take all businesses. In all businesses, whatever the cash receipts are there, let's say in cotton business cash receipts are 10 lakhs. In chocolate business cash receipts are 15 lakhs. Total cash receipts 25 lakhs. What you need to take? You need to take total cash receipts. You have to take aggregate cash receipts of all businesses. If aggregate cash receipts are less than or equal to 5% of total receipts of all businesses. Total receipts of all businesses. All businesses. In that case, question 1 is satisfied, condition 1 is satisfied. If aggregate cash payments of all businesses are less than or equal to 5% of total payments of all businesses. If both these conditions are satisfied, then threshold limit is 10 crore and up to 10 crore tax audit is not applicable. Audit is not applicable. If turnover is more than 10 crore, then tax audit is applicable. If answer to the question is no, then up to 1 crore, turnover up to 1 crore, tax audit not applicable. If turnover is more than 1 crore, then tax audit is applicable. Are you able to understand? So any businessman comes to you, ask him these two questions. Aggregate cash receipts of all businesses. If they are less than or equal to 5% of total receipts, aggregate cash payments of all payments. If they are less than or equal to 5% of total payments. If both the conditions are satisfied, then up to 10 crores tax audit is not applicable. Otherwise, the threshold limit is 1 crore. Up to 1 crore tax audit is not applicable. Now, you can see payment or receipt by non-account payee check. See, if any payment is made by any check other than account payee check, let's say payment is made by bearer check or payment is made by crossed check. If any payment is made by bearer check or crossed check, they are not account payee check. They are other than account payee check. It will be treated as cash payment only. Are you able to understand? So if any payment is made by bearer check or crossed check, it will be deemed as cash payment. Similarly, if any amount is received, okay, by crossed check or bearer check, it will be treated as cash receipt only. Only if payment is made by account payee check, then only it will be treated as bank payment. Only if any payment is received by account payee check, then only it will be treated as bank receipt. Are you able to understand? So quickly, up to, like, generally turnover limit for applicability of tax audit is 1 crore. Up to 1 crore tax audit is not applicable. Next, but there is one exception. If cash receipts are less than or equal to 5% of total receipts, if cash payments are less than or equal to 5% of total payments, if both the conditions are satisfied, up to 10 crores tax audit is not applicable. Are you able to understand? Now, when you are calculating threshold limit of 1 crore rupees, whatever the threshold limit of 1 crore is there, when you are calculating this threshold limit, you should not consider individual business, you should consider all businesses together. All businesses together, if turnover is more than 1 crore, tax audit is applicable for all businesses, not individual business. Next, if any payment or receipt is made by other than account payee check, it will be treated as cash payment or cash receipt. Okay. Sir, please revision videos for CMA final. Yes, after this, I am going to do all the revision videos for CMA final. You need not worry. So this is about tax audit applicability for business. Did you understand? So very simple, tax audit applicability for business. Next, for professions. In case of professional SSC, tax audit is required if gross receipts are more than 50 lakhs. So for professional, what is the threshold limit? 50 lakh rupees. I am a chartered accountant. I am a chartered accountant in practice. I am a professional. In my profession, if my gross receipts are more than 50 lakhs, I need to get my books of accounts also audited by another chartered accountant. Advocate is there. Okay, lawyer is there. In his profession, if he gets gross receipts more than 50 lakhs, he is also required to get his books of accounts audited. Are you able to understand? So, in case of profession, what is the threshold limit? Profession. If gross receipts are less than or equal to 50 lakhs, tax audit is not applicable. If gross receipts are more than 50 lakhs in a previous year, okay, whatever this limit is there, that is for previous year, then tax audit is applicable. Are you able to understand? Now, for example, an individual is having 2 professions. In that case, do we need to consider gross receipt for each profession or gross receipts for all professions? For example, there is me, Uma is there. Like I am doing chartered accountancy profession. I am also into teaching profession. So I am dealing with 2 professions. In chartered accountancy profession, gross receipts are 35 lakhs. In teaching profession, gross receipts are 20 lakhs. Individually, gross receipts are less than 50 lakhs. Now, whether tax audit is applicable to me? Yes, tax audit is applicable because when you are calculating limit of this 50 lakhs, okay, you should not consider individual profession, you should consider aggregate gross receipts in all professions. Aggregate gross receipts in all professions is equal to 35 plus 20, 55 lakhs, which is more than 50 lakhs. So, tax audit is applicable. Are you able to understand? For example, there is an individual, Uma, he is doing business and he is also having profession. I am doing business, I am also doing profession. Now, in business, my turnover is 80 lakhs. In my profession, gross receipts are 40 lakhs. Now, am I required to get tax audit? See, the thing is, business is different, profession is different. For business, separate threshold limit of 1 crore is applicable. For profession, separate limit of 50 lakhs is applicable. So, in business, turnover is less than 1 crore. In profession also, gross receipts are less than 50 lakhs. Tax audit is not applicable. That means what? Whatever the threshold limit, 1 crore 50 lakhs is there, that you have to apply separately for business and profession in case of a person. So in case of single person, if he is doing business, if he is also doing profession, don't apply simultaneously. For business, separate threshold limit of 1 crore is applicable. For profession, separate gross receipts of 50 lakhs are applicable. Are you able to understand? See the depth. Are you able to understand? Because we are going to do questions also at this level of depth. ICMA has given tax audit chapter. Okay, so whatever the limits are there, for business, separate limit of 1 crore is applicable. For profession, separate limit of 50 lakhs is applicable. Are you able to understand? You can see here, if SSC threshold limit of 1 crore or 50 lakhs is applicable for all businesses, all professions together. Okay, so individually for businesses, 1 crore is the limit. Individually for professions, 50 lakhs is the limit. Okay, that's why I use a different color. 1 crore red color for all businesses, 50 lakhs purple color for all professions. Okay, so individually for business, turnover limit is 1 crore. Individually for all professions, gross receipts limit is 50 lakhs. So till here, did you understand everybody? Shall we do some questions? This material is shared in my Telegram channel as well as link to this YouTube video. Open page number 13. Please open page number 13. Examine applicability of tax audit under section 44AB in following cases. So you can see turnover is given. Business A, business B and profession A. We have to tell whether tax audit is applicable or not. In business A, turnover is 72 lakhs. In business B, turnover is 0. In profession, 54 lakhs. So, we have to check for businesses separately, professions separately. So business A plus business B, how much is turnover? 72 lakhs, which is less than 1 crore. But in case of profession, gross receipts are 54 lakhs. That means gross receipts are more than 50 lakhs. See, in business, turnover is less than 1 crore. But in profession, gross receipts are more than 50 lakhs. So, tax audit is applicable. Sir, whether tax audit is applicable only for profession? No. Tax audit is applicable for profession as well as tax audit is also applicable for business. For both business and profession, tax audit is applicable. Are you able to understand? How, sir? I have told you here. We have to check for each business separately and profession separately. See, tax audit requirement under section 44AB is not applicable for individual business, individual profession. Tax audit is applicable for SSC. When tax audit is applicable for SSC, for all the businesses he is doing, for all the professions he is doing, tax audit is applicable. Are you able to understand? See, for checking whether tax audit is applicable or not, we will check threshold of 1 crore for business, 50 lakhs for profession. But once tax audit is applicable for SSC. When tax audit is applicable for SSC, it is applicable for all his businesses, all his professions. Okay, so write down once tax audit is applicable. Once tax audit is applicable, it is applicable for SSC. It is applicable for SSC. That means what? It is applicable for all businesses and professions of SSC. And professions of. Okay. Yes, once it is applicable for all businesses and all professions. But when you are checking, check separately for business, separately for profession. When checking for business, threshold limit is 1 crore. When checking for profession, threshold limit is 50 lakhs. If any one is applicable, because of business, tax audit is applicable. It is applicable for professional. Because of profession, tax audit is applicable. Then tax audit is applicable for business also. Next, question number 2. Shall we discuss? Business A 86 lakhs, business B 0. So 86 lakhs plus 0, total turnover 86 lakhs, which is less than 1 crore. In profession, gross receipts are less than 50 lakhs. So business turnover is less than 1 crore, profession gross receipts are less than 50 lakhs. So tax audit is not applicable. Tax audit is not applicable for business, tax audit is not applicable for profession. Next, he is only having business 1, business 2. Do we need to check individually or do we need to check aggregatedly? We need to check aggregatedly. So 65 lakhs plus 40 lakhs, total 105 lakhs, which is more than 1 crore. So tax audit is applicable. Are you able to understand? I hope till here you got clarity. Sir, do we have to write formats of 3CB or 3CD in exams? Have patience, I will come to it, then I will discuss. Okay. This much you got clarity, right? Let's go back to the concept. Next, tax point is there. Listen carefully. If SSC has only non-business or non-professional income, then 44AB is not applicable. What do you mean by this? I am getting only interest income. Interest income from fixed deposits. It is taxable under income from other sources. But whatever the interest income is there, interest income I received is 1.5 crore, which is more than 1 crore. Sir, whether tax audit is applicable? No, tax audit is not applicable. Only if you have business income, only if you have profession income, then only tax audit is applicable. Other than business, other than profession, if you have any other income, then tax audit is not applicable. Let's say you received rental income. You received rental income of 2 crores. It is more than 1 crore. Whether tax audit is applicable? No. Tax audit is applicable only if you are doing business or only if you are doing profession. Next, I am getting salary income. Let's say I got salary of 4 crores. Salary 4 crores is more than 1 crore. Sir, whether tax audit is applicable? No, not applicable. So if you are not having business income, if you are not having professional income, if you are having any other income, if that any other income is more than 1 crore, then tax audit is not applicable. Are you able to understand? What if his business is a investing company? Yes, then tax audit is applicable. You are saying business. The moment you say business, he is doing business. Whenever he do business, 1 crore threshold limit is applicable. If he is not doing business, if he is not doing profession, if he got any income that is taxable under other heads, house property, salary, other sources, capital gain. Let's say I got capital gain of 7 crores. Now it is more than 1 crore. Whether tax audit is applicable? No, tax audit is not applicable. Okay. Yes, basically PGBP income should be there. Not income, turnover, because there is difference between turnover and income. Turnover is sales. Income is net profit. Okay. What you need to check is not income. You need to check is turnover. Based on turnover, we are going to determine the tax audit. Tax audit applicability. Next. Here, I wanted to teach some 3-4 important points. Please listen. Please don't think first part only I am explaining lot of time, because remaining part we can close quickly. Initial part only lot of discussion is there. Okay. What I said, if a businessman comes to you, you have to ask 2 questions. Sir, in your business, if cash receipts are less than or equal to 5% of total receipts, if cash payments are less than or equal to 5% of total payments, if both the conditions are satisfied, up to 10 crore tax audit is not applicable. If cash receipts are more than 5% of total receipts, or if cash payments are more than 5% of total payments, in that case, up to 1 crore tax audit is not applicable. Now, shall we do second question? Open question number 2. First open question number 3, then we will see question number 2. Open question number 3. Now, the following information is noted from records of PQR Limited engaged in 2 businesses: sale of computer and sale of ready-made garments for previous year ending on 31st March 2025. So, computer business, sales are done through bank. How much? 300 lakhs, and garments 50 lakhs. Sales made in cash. Computer 0, garment business 200 lakhs. Purchases through banking channel 250 lakhs and 200 lakhs. See, first you need to check condition 1. What is condition 1? Condition 1, cash receipts are less than or equal to 5% of total receipts. Okay. When you are calculating these cash receipts, do you calculate cash receipt for each business or do you calculate aggregate cash receipts? What I have told you, you have to take aggregate cash receipts, correct? So let us take aggregate cash receipts. How much are cash receipts? Tell me. Cash receipts. Sales made in cash, 200 lakhs. So cash receipts are 200 lakhs. How much are total receipts? Cash receipts 200 lakhs. Total receipts. Total receipts means cash receipts plus bank receipts. So total receipts means 300 lakhs plus 50 lakhs plus 0 plus 200 lakhs. How much are total receipts? 550 lakhs, right? 300 plus 50 plus 0 plus 200. 550 lakhs. Now do the calculation. Cash receipts by total receipts into 100. Cash receipts are 200 lakhs divided by 550 lakhs into 100. How much? 200 by 550 into 100. 36.36%. That means whether cash receipts are less than 5% or cash receipts are more than 5%. Cash receipts are more than 5% of total receipts. See, cash receipts are more than 5% of total receipts. So whether this condition is satisfied, this condition is not satisfied. As this condition is not satisfied, what is the threshold limit? Then threshold limit is 1 crore. Threshold limit is not 10 crores, threshold limit is 1 crore. Are you able to understand? So how much is turnover here? Here total receipts, nothing but turnover. Turnover is 550 lakhs, which is more than 1 crore. So tax audit is applicable. Are you able to understand? If both the conditions are satisfied, cash receipts less than 5% of total receipts, cash payment less than 5% of total payments, both these conditions are satisfied, then only 10 crore threshold limit is applicable. Here condition 1 only not satisfied, then 1 crore threshold limit is applicable. See, whatever the criteria is there, that criteria is required to be checked for each year independently. For 24-25, you will check the criteria. Satisfied 10 crore. For 25-26, you will check the criteria. Criteria not satisfied. 1 crore threshold limit is applicable. For every year independently, you have to check the criteria. Okay. I hope you understood, Hari. Whatever this criteria is there, this is applicable year on year. Applicable for each year separately. I hope you got clarity now. So you can read the answer. See, both the conditions are given. If both the conditions are satisfied, then 10 crore rupees. In this respect, SSC is engaged in multiple businesses, then aggregate turnover or gross receipts is required to be considered. You can see, since cash sales constitute more than 5% of total receipts made by the company during the previous year, company cannot avail benefit of 10 crore rupees. Company cannot take benefit of 10 crore rupees. Threshold limit applicable is only 1 crore. Further, sales made by company exceed 1 crore rupees. Hence, tax audit is applicable for SSC company. Tax audit is applicable for SSC and not for each business carried on by it. Very, very, very important. I told you, once tax audit is applicable, it is applicable for SSC. It is not applicable for individual business. That's why once tax audit is applicable, it is applicable for SSC and all businesses and all professions done by the SSC. Okay. So did you understand question number 3? Now, shall we discuss question number 2? Everybody. Before we discuss question number 2, here what I said aggregate of all cash receipts, correct? Aggregate of all cash receipts. Aggregate of all cash receipts. Sir, that means, do we need to take only sales? Aggregate of all cash receipts means, see, we need to check whether cash receipts are less than or equal to 5% of total receipts or not. For the purpose of checking, what we will take aggregate cash receipts. Sir, what do you mean by aggregate cash receipts? Aggregate cash receipts means cash received for any purpose, whether cash received through sale of raw material or finished goods, whether cash received for sale of fixed assets or sale of scrap. Even that is also to be considered in calculation of cash receipts. Let's say you received advance. Even that is also treated as cash receipts. In business, whatever the money that you receive, every amount that is received by you, it will be treated as cash receipts only. Are you able to understand? See, for checking turnover, 1 crore or 50 lakhs, we will take only turnover. Here, not only turnover, sale of raw material or finished goods is turnover, but sale of fixed assets is not turnover. Even though it is not turnover, still it should be considered in calculation of aggregate cash receipts. Are you able to understand? When you are calculating aggregate cash receipts, you have to consider all amount that is received in the business, whether amount is received for sale of material or whether amount is received for sale of asset or rental income received or advance amount received. All the amounts, whatever the money that you receive in business, that will be treated as cash receipt, and you have to consider aggregate cash receipts. Are you able to understand? Next, second condition, cash payments less than or equal to 5% of total payments. Now, what you need to consider here, you need to consider aggregate cash payments. Sir, what do you mean by aggregate cash payments? Whether you are making for purchase of raw material or purchase of goods, whether you are making payment for purchase of fixed asset, whether you are making payment for any advance, or whether you are making payment for any expenses, whether revenue or capital, whatever the payment that you make in your business, all payments are to be considered for the purpose of aggregate cash payments. Are you able to understand? Whether you made payment for purchase of raw material, whether you made payment for purchase of fixed asset. Purchase of fixed asset is capital expenditure. Purchase of raw material is revenue expenditure. No differentiation. Every payment, whether it is revenue payment or capital expenditure payment, all cash payments are to be considered for evaluating this condition. If aggregate cash payments, whether for revenue expenditure or capital expenditure, all cash payments, like If all cash payments are less than or equal to 5% of total payments, then condition 2 is satisfied. Are you able to understand? Now, shall we do question number 2? So, here aggregate cash receipts, aggregate of all cash payments means you need to consider revenue cash receipts, capital cash receipts. You have to consider revenue cash payments and capital cash payments. So, all receipts and all payments are to be considered. See, on first part only he asked 3 questions. All the questions that we are doing right now, these are institute material questions. So, you have to be careful. You can check the material released by ICMAI, same questions will be there. I copied from institute material and I have prepared the compact material in an understandable way. So shall we start doing question number 2, everybody? The following information is noted from records of ABC and Company, a partnership firm engaged in manufacturing and trading of goods for previous year ending 31st March 2025. You can see sale or purchase of machine. It is capex, right? Capital expenditure. Do we consider capital receipts, capital payments? Yes, we will consider capital receipts and capital payments also for calculation of aggregate cash receipts and aggregate cash payments. Okay. So cash, NEFT means nothing but bank receipt or bank payment, correct? Next, total percentage of cash as a percentage of total cash. Receipts and payments. First, we will focus on receipts. How much are cash receipts? Cash receipts are 1.3 rupees in lakhs. Cash receipts 1.3 lakhs, 4 lakhs. Advance received. Even though it is advance, still you have to consider as cash receipt. Next, sale of goods 25 lakhs, other receipts 16 lakhs. Total 46.3 lakhs. Those are cash receipts. How much are total receipts? 981.3 lakhs. So 46.3 cash receipts plus 935 bank receipts. Total receipts are 981.3 lakhs. This is total receipts. Now tell me how much are cash receipts? Question number 3. Cash receipts are 46.3 lakhs. Total receipts 981.3 lakhs. Now, cash receipts by total receipts into 100. 46.3 lakhs divided by 981.3 lakhs into 100. How much? .7182%. That means less than 5%. Therefore, cash receipts are less than 5% of total receipts. Whether condition 1 is satisfied? Yes, condition 1 is satisfied. If condition 2 is also satisfied, then threshold limit applicable is 10 crore. Okay. Cash receipts. Sorry. Cash payments. Check 82 lakhs, 35 lakhs, 100 lakhs. See, 100 lakhs is for raw material. This is for purchase of car. Car is fixed asset. Even for car purchase, if you make any cash payment, that will be considered. Whether it is revenue or capital, don't consider. Forget. Very simple. All cash payments consider. Okay. Finished goods 108 lakhs. Other receipts 152 lakhs. Now, All are bank payments only. All these are bank payments. Bank payments 477 lakhs, correct? Bank payment 477 lakhs. How much is cash payment? 10 lakhs, 2 lakhs and 16 lakhs. Cash payment 28 lakhs. So consider cash payment 28 lakhs, bank payment 477 lakhs. How much is total payment? 477 plus 28, 505 lakhs, which is more than, total payment 505 lakhs. Now we have to take percentage, cash payment divided by total payment into 100. Cash payment 28 lakhs, total payment 505 lakhs into 100. 5.544%. Wow. Unfortunately, it is more than 5%. Here, cash payment is more than 5% of total payment. So whether condition 2 is satisfied, condition 2 is not satisfied. So therefore, threshold limit is 1 crore. Sameta, can you make it easier? What I have to make it easier? Which concept? So therefore, threshold limit applicable is 1 crore. And how much are sales made here? Sales made are 25 lakhs plus 580 lakhs, 605 lakhs. Sales are 605 lakhs, which is more than 1 crore. So tax audit is applicable in the given case. Did you understand? Everybody? I hope you got clarity. So next, fourth question and fifth question, these two are relating to 3CD. Okay. So everybody, did you understand 44AB? Next we will discuss 44AB read with 44AD. Do you remember 44AD? Presumptive provisions. So as per 44AD, who can choose 44AD? Resident individual, resident HUF, resident partnership firm other than LLP can choose 44AD. As per 44AD, how much is presumptive income? As per 44AD, presumptive income is equal to 8% of cash turnover plus 6% of bank turnover. That will be treated as presumptive income. Correct? Next, who can choose 44AD? So, any businessman came to you. If any businessman comes, you will ask him only one question. In your business, if cash receipts are less than or equal to 5% of total receipts, cash receipts are less than or equal to 5% of total receipts. If answer to this question is yes, then threshold limit is 2 crores threshold limit is 3 crores. If answer to this question is no, then threshold limit is 2 crores. That means if turnover is less than or equal to 3 crores, 44 AD can be chosen. If turnover is more than 3 crores, then 44 AD cannot be. Here, if turnover is less than or equal to 2 crores, then 44 AD can be chosen. If turnover is more than 2 crores, then 44 AD cannot be. That means what? Any businessman came to you, you will ask him one question. Sir, in your business, if cash receipts are less than 5% of total receipts, if yes, then up to 3 crore rupees, you can disclose presumptive income under 44 AD. If cash receipts are more than 5% of total receipts, in that case, up to 2 crores only, presumptive income can be disclosed under section 44 AD. Okay. Next. See, those who are disclosing presumptive income, for them, tax audit is not applicable. We have discussed. If anyone is disclosing presumptive income, they are not required to maintain books of accounts. Tax audit is not applicable. So, if I am choosing 44 AD or 44 ADA, presumptive provisions, tax audit is not applicable. But the point is, for any previous year, if SSC discloses income lower than presumptive income, he becomes ineligible to choose 44 AD for subsequent 5 years. What do you mean by this? In previous year 23-24, I disclosed income under 44 AD. In 24-25 also, I disclosed income under 44 AD. In 25-26, there is loss. And I wanted to show actual loss. The thing is, once you choose 44 AD, for 5 years, you have to choose 44 AD. But in this year, did I choose 44 AD? I opted out of 44 AD. Correct? I opted out of 44 AD. Once I opted out, for next 5 years, I cannot choose 44 AD. Are you able to understand? I can't choose 44 AD. So that is the punishment. Once you choose 44 AD, as per presumptive provisions only, you have to disclose your income for 5 years. Once you choose 44 AD, in next 5 years, if you violate 44 AD, if you opt out of 44 AD, for next 5 years, you cannot choose 44 AD. So for 25-26 and next 5 years, in these years, if total income is more than basic exemption limit, then tax audit is applicable. Are you able to understand? So once you come out of 44 AD, for next 5 years, you cannot choose 44 AD. The year in which you came out of 44 AD, that year and next 5 years, in those years, two conditions are required to be satisfied. Condition 1, you cannot choose 44 AD. Condition 2, total income should be greater than basic exemption limit. If these two conditions are satisfied, then tax audit is applicable. Are you able to understand? Sir, whether total receipts include bank receipts? Yes, total receipts means cash receipts plus bank receipts. So cash receipts divided by total receipts into 100. That's how you will calculate. Okay. You can see this point, SSC covered under 44 AD4 and total income is greater than basic exemption limit, then tax audit is applicable. Are you able to understand? Super. I will summarize. Generally, if you are choosing presumptive provisions, 44 AD is not applicable. But once you choose 44AD, for 5 years you have to choose 44AD. In these 5 years, if you opt out of 44AD, if you violate 44AD, then for next 5 years you cannot choose 44AD. So what generally you have to choose 44AD continuously for 5 years. If you violate, punishment. What is punishment? For next 5 years you cannot choose 44AD. So in the year of violation and next 5 years. In the year of violation and next 5 years, you cannot choose 44AD. That is condition 1. Condition 2, in those years, if total income is more than basic exemption limit, then tax audit is applicable. Are you able to understand? (44AB) read with section 44 ADA. Generally, 44 ADA is for notified professional. If SSC is disclosing presumptive income as per section 44 ADA1, then tax audit is not applicable. See, who can choose 44 ADA? Notified professionals can choose 44 ADA, correct? Notified professionals. Who are notified professionals? Chartered accountant, lawyer, cost accountant, company secretary, interior designer, okay, film artist, all these will be treated as authorized representative, all these will be treated as notified professionals, correct? So, notified professionals can choose 44 ADA. So, if any notified professional comes, you have to ask him one question. Sir, in your business, whether cash receipts are less than or equal to 5% of total receipts? If answer to this question is yes, then threshold limit is 75 lakhs. If answer to this question is no, then threshold limit is 50 lakhs. That means what? If gross receipts are less than or equal to 75 lakhs, then 44 ADA can be chosen. If gross receipts are more than 75 lakhs, then 44 ADA cannot be chosen. Here, if gross receipts are less than or equal to 50 lakhs, 44 ADA can be chosen. Here, if gross receipts are more than 50 lakhs, 44 ADA can be chosen. Did you understand? So normally, if any notified professional comes to you, you have to ask him, sir, in your business, in your profession, if cash receipts are less than or equal to 5% of total receipt. If answer is yes, up to 75 lakhs, they can disclose income under presumptive provisions. If answer is no, up to 50 lakhs only, presumptive provisions can be chosen. How much will be taken as presumptive income? Presumptive income is equal to 50% of gross receipt. This we have already discussed in class when I am explaining PGBP provisions. Okay. Now, if anyone is disclosing presumptive income as per 44 AD, then tax audit is not applicable. Let's say I am a chartered accountant. Every year, I should disclose minimum 50% of gross receipts as presumptive income. In any previous year, for any previous year, if SSC discloses income lower than presumptive income, that means like SSC actual income is lower than presumptive income for any previous year. And in that previous year, total income is more than basic exemption limit. Let's say in 25-26, I am doing practice. I am a CA in practice. My gross receipts are 40 lakhs. My expenses are 30 lakhs. How much is my net profit? My net profit is 10 lakhs. That means how much is my actual income? Actual income is 10 lakhs. How much is 50% of gross receipts? 50% of gross receipts means 20 lakhs. Here 10 lakhs is less than 20 lakhs. Actual income is less than 50% of gross receipts. In this year, from clients I got 40 lakhs. But there are many expenses. Staff expenses are there. Laptops I purchased. Depreciation is there. Rent expenditure is there. Electricity is there. Water bills are there. All expenses are 30 lakhs. My profit is only 10 lakhs. So, can I choose 44 ADA? Yes. Because my gross receipts are less than 50 lakhs. But if 44 ADA is chosen, presumptive income is equal to 50% of gross receipts. Now, 50% of gross receipts means 40 lakhs into 50%, which is 20 lakhs, correct? Now, the thing is, my income is only 10 lakhs. How can I show 20 lakhs as income? How can I pay tax on 20 lakhs? So, I will disclose only actual income. If I disclose only actual income, then if actual income is less than 10 lakhs and my total income is 10 lakhs, which is greater than basic exemption limit. So, in this case, tax audit is applicable. Are you able to understand? If I disclose minimum 50% of gross receipts, presumptive income, then tax audit is not applicable. But if I disclose my income lower than presumptive income, so here presumptive income is 50% of gross receipts. My actual income is less than 50% of gross receipts. In this case, tax audit is applicable. Are you able to understand? So, if SSC discloses income lower than presumptive income and total income is more than basic exemption limit, if both these conditions are satisfied, what is the conjunction and? Then tax audit is applicable under section 44AB. Okay. So, condition 1, actual income is less than presumptive income. Condition 2, total income is more than basic exemption limit. If both these conditions are satisfied, then tax audit is applicable under 44AB. You are disclosing 50% of gross receipts or more than that as presumptive income. Tax audit is not applicable. If you disclose income lower than presumptive income, then only tax audit is applicable. Next. Section 44AB read with section 44AE, 44BB, 44BBB. See 44BB, 44BBB. These are presumptive income sections for non-residents. I have discussed in non-resident taxation. Non-residents who are engaged in power sector turnkey projects, they can disclose income under 44BBB. Presumptive income is equal to 10% of gross receipts. Okay. Now 44AE, you know 44AE, right? Flying, hiring and leasing of goods carriages. Flying, hiring and leasing of goods carriages. So like 44AE, how much is presumptive income? Presumptive income, like we have heavy goods vehicle, light goods vehicle will be there. For heavy goods vehicle 7,500 per month. For light goods vehicle 1000 rupees per month. So those who are choosing 44AE, 44BB, 44BBB, they should disclose presumptive income. But those who are choosing 44AE, 44BB, 44BBB, if actual income is less than presumptive income, then tax audit is applicable. Are you able to understand? Then tax audit is applicable. Are you able to understand? Simple. 44 AD. Actual income less than presumptive income and total income greater than basic exemption limit. tax audit is applicable. 44 ADA, same as it is. Actual income less than presumptive income and total income greater than basic exemption limit. Then also tax audit is applicable. 44 AE, 44 B, 44 BB, 44 BBB. Only condition 1, actual income less than presumptive income. Condition 2 is not applicable. In this case, tax audit is applicable. Did you understand? For 44 AD, this is also to be satisfied. For 44 ADA, this is also to be satisfied. For 44 AE, condition 2 is not applicable. Are you able to understand? Sir, you are the only faculty who has touched this new topic of CMA syllabus. Thank you. Generally, I teach in Laksha College of Commerce. My students are after me to explain this topic. I will give credit to my students. They are constantly after me to explain this topic. So last 3-4 days, I have done. I have kept lot of efforts on preparing the material, and today I am before you. Next, general tax points. Just because SSC's accounts are audited under another law does not exempt tax audit compliance. Let's say a company is there, Reliance Limited. Reliance Limited already got its books of accounts audited under Companies Act. Sir, again, whether books are required to be audited under Income Tax Act? Yes. Just because Companies Act audit is done, you cannot say income tax audit is not applicable. Even though Companies Act audit is done, still you have to get your books of accounts audited under Income Tax Act. Are you able to understand? Next, to comply with section 44AB, SSC must also submit audit report in form 3CA, 3CB plus 3CD signed by a chartered accountant. See, right now, tax audit signing power is only with chartered accountant. ICMAI, it is fighting very hard with Ministry of Finance, and I feel there are more chances even cost accountants will also get signing power. That's why they have inserted this tax audit chapter. So, let's hope for the good news. In future, cost accountants may also sign the audit report. Abhi to right now, tax audit report is signed only by chartered accountants. Next, what is due date for submitting tax audit report? See, what is ITR due date? If tax audit is applicable. Then ITR due date is 31st October of assessment year. Whatever ITR due date is there, 1 month before. 1 month before means 30th September of assessment year. So, on or before 30th September, this is due date for submitting tax audit report. Due date for submitting tax audit report. So 1 month before ITR due date, you have to go to chartered accountant and you have to submit the tax audit report. So for submitting tax audit report, due date is 30th September, this month end. For filing ITR, due date is 31st. Next. Till now I am saying turnover 1 crore, gross receipts 50 lakhs. Sir, what do you mean by turnover? What do you mean by gross receipts? That I am going to explain right now. turnover and gross receipts. Shall we discuss what turnover means and what gross receipts mean? Everybody. I think it will take another 1 hour or 1.5 hours to discuss. Maybe 1 hour or 1 hour 15 minutes. Are you comfortable or can we discuss this as part 2? Students, you have to tell. Shall I continue? Okay, perfect. Turnover. See, very simple. Turnover means with regard to sales or with regard to services, whatever the amount received, total amount will be treated as turnover. You can see aggregate amount received for sales as well as services. So for doing sales and for doing services, whatever the amount that is received, aggregate amount will be treated as turnover. So aggregate amount for which sales are affected or services are rendered by an enterprise. It would include not only sale of goods but also sale of services. Tax treatment for various items listed on invoice while calculating the turnover. See, if any, see in invoice various items are there: trade discount, turnover discount, cash discount, commission. Sir, whether these are to be included in turnover or not. If any trade discount is given, trade discount is to be excluded provided discount is allowed in the invoice itself. So trade discount should be clearly mentioned in the invoice. If trade discount is clearly mentioned in the invoice, then trade discount amount you will not consider, you will exclude in calculation of turnover. What do you mean by this? Let's say invoice will be prepared. In invoice it was written like this: taxable value 80,000 less trade discount 5,000. Trade discount 5,000. 75,000 is payable. Now the point is whether 80,000 is treated as turnover or whether 75,000 is treated as turnover. 80,000 is not treated as turnover, 75,000 is treated as turnover. If turnover is clearly mentioned in the invoice, then exclude that turnover. After excluding the turnover, whatever the balance is there, only that will be taken as turnover. Okay. Turnover discount. Generally, turnover discount means quantity discount. Let's say I went to buy iPhones. If I buy only one iPhone, he will not give any discount. I said I will buy 150 iPhones. He will give some 5% discount because I am purchasing in lot. 150 phones I am purchasing. Quantity discount. So if any quantity discount is given, that is to be excluded in calculation of turnover. And if any cash discount is given, cash discount is not to be excluded. What do you mean by this? Let's say 75,000 is payable, 2 months time is given. After 1 month, amount is paid. See, 2 months time limit is given, but before 1 month only, amount is paid by customer. So as he is paying early, some extra discount is given. From 75,000, 500 discount is given and only 74,500 is paid. Now whatever this 500 is there, this 500 we call as cash discount, correct? So whatever cash discount is there, cash discount is not to be excluded. Don't exclude. This cash discount, don't exclude. That means 75,000 will only be taken as turnover. Are you able to understand? trade discount given, quantity discount given, volume discount, turnover discount, exclude. But if any cash discount is given, don't exclude in calculation of turnover. Commission on sale. If any commission is given on sale, okay, or if any commission is received on sale, don't exclude it. That commission is like included in calculation of turnover. Let's say I told there is A, there is B. B is agent of A. Now B sold, like A gave one iPhone 1 lakh rupees. B sold iPhone to C for 1 lakh. From 1 lakh, B reduced his commission. B commission 3,000 rupees and 97,000. 97,000 is paid to. Even though 97,000 is paid, in case of Mr. A, turnover is equal to 1. Are you able to understand? You should not reduce commission. Total 1 lakh will be treated as turnover of Mr. A. Okay. If any commission is given to agent, don't reduce that commission from turnover. Gross amount will be taken as turnover. Next, sales returns. If sales returns, let's say I sold 10 lakh worth of goods, 2 lakh goods are returned. If any sales returns are there, they are to be excluded even if the returns are from sale of earlier years. Sales returns are to be excluded while calculating the turnover. Sale of fixed asset. See, fixed asset, it is capital receipt, right? So whenever you sell fixed asset, that is to be excluded in calculation of turnover. Sir, cash discount is given at the time of purchase. That also excluded, sir. No, cash discount don't exclude. Only trade discount and quantity discount exclude. Let's say for outsiders, I will give 3 months credit period. Pradeep came to me. Pradeep said, sir, I don't want 3 months. I will pay immediately. So for Pradeep, additionally, I gave 3% cash discount. If I give cash discount at the time of purchase only, don't exclude. Okay. Next, sale of investment. It is capital receipt, right? So it is to be excluded. Sale of fixed asset, sale of investment, they are capital assets, they are to be excluded. Again, scrap sale is to be included in calculation of turnover. Shares held as investment, they are also capital receipts, so they are to be excluded. Shares held as stock in trade. If shares held as stock in trade, it is stock in trade, then it will be revenue receipt, so it has to be included. GST. See, whatever GST amount is there, that is not our sales now. Let's say I sold one mobile. Rate of GST is 18%. Let's say cost is 50,000. On this GST at the rate of 18%, how much? 9,000. 59. Now, how much customer will give me? Customer will give me 59,000. Even though customers gives 59,000 to me, 50,000 is my turnover, 9,000 is GST payable to government. Correct? Whatever GST payable to government, this is not turnover. But the thing is, when you are doing accounting, you have to maintain separate ledger for sales, separate ledger for GST. Then only GST is excluded from turnover. When you are writing the entry, you have passed the entry, bank account debit to sales, 59,000. Here, did you maintain separate ledger? You did not maintain separate ledger. Total 59,000 is treated as sales. So here total 59,000 will be treated as turnover. If you maintain separate ledger, then it will be separated. Are you able to understand? So very simple. While calculating turnover, when you are calculating turnover, if there is any trade discount, turnover discount or quantity discount, exclude in calculation of turnover. If there is any cash discount, don't exclude. Okay, next. If there are any sales returns, exclude sales returns. Yeah, if there is any sale of fixed asset is not revenue receipt. Don't include sale of fixed asset in turnover. Next, sale of investments, sale of shares held as investments, those are also capital receipts. See, you sold asset and made money. That is not revenue receipt. It is capital receipt. Capital receipt don't consider in calculation of turnover. Okay. Scrap sale include in calculation of turnover. GST. If separate GST ledger is maintained in accounting, exclude GST. If separate ledger is not maintained, include GST also. Okay. So this much. I think it will take another more 1 hour. So we will stop here as part 1. Part 2 also I will do recording today only. I will let you know the time. Okay. So yes students, today now let us start with second part of tax audit chapter. Yesterday we discussed till turnover concept. Now I will start discussing tax points. While calculating turnover of share brokers or sub brokers, you know there are multiple trading apps, Motilal Oswal, Grow. So when you are doing audit of share brokers, for share brokers, what is the major revenue? The major revenue is commission. Okay. So or brokerage income. When you are calculating turnover of share brokers, you need to consider only brokerage income. For example, I purchased like one share through Motilal Oswal. Let's say share cost is 1200 rupees. On 1200 rupees, Motilal Oswal commission is 10 rupees. Now, through Motilal Oswal, I purchased it 1200 rupees a share. So, share cost is 1200. How much is commission of share broker? Commission of share broker is 10 rupees. So how much I paid? I paid 1210 rupees. Now, when you are calculating turnover of Motilal Oswal or Grow, okay, this 10 rupees is the turnover of share broker. Are you able to understand? So whenever you are calculating turnover of share broker, what you need to consider? You need to consider only brokerage income as turnover. I am paying 1210 rupees to Motilal Oswal or I am paying 1210 rupees to Grow. But total 1210 rupees is not turnover of Grow. Only whatever the brokerage income is there, 10 rupees, that will be treated as turnover of Grow. Okay. If they also do trading on their own account, then full sale value of such trades will count in the turnover. What do you mean by this? Let's say Motilal Oswal, it is individually buying shares and it is also individually selling shares. So like Motilal Oswal, it is share broker, independently it is buying and selling shares. So whenever Motilal Oswal is independently buying and selling shares, whatever the sale value of shares is there, that will be added as turnover to Motilal Oswal. And along with that, for share brokerage, whatever the brokerage income received, that will also be treated as turnover. While calculating turnover of commission agents, turnover is equal to only commission earned. You know commission agents, right? Let's say there is one mobile showroom, Select. It's a mobile showroom. What it is doing? Let's say it is authorized dealer for Apple. What it will do? From Apple, it will take iPhones and it will sell iPhones in India. For each iPhone sold, 3000 is the commission of Select Mobiles. Okay, Select Mobiles is authorized dealer for Apple. So what Select Mobiles is doing? From Apple, it is taking iPhones and those iPhones are sold in India. For each iPhone sold, how much is the commission? Commission is 3000. Now, I went to select mobile shop. I purchased one iPhone. iPhone cost, let's say iPhone sale price is 1,15,000 rupees. I paid 1,15,000 to Select Mobiles. So Select Mobiles received 1,15,000 from the customer. Total 1,15,000 is paid to Select Mobiles. Even the 1,15,000 is paid to Select Mobiles, 1,15,000 is not treated as income of Select Mobiles. Whatever the commission 3,000 rupees is there, only this will be treated as turnover or turnover of Select Mobiles. Are you able to understand? So whenever there is commission agent, in case of commission agent, what will be taken as turnover? Only commission income will be taken as turnover. If risks or rewards of ownership pass to the agent, then full sale value received or receivable is treated as turnover. What do you mean by this? Let's say Apple is there. Apple told, like, I am selling iPhones to you. That means whenever Apple sells iPhones, like risk and reward is also transferred to Select Mobiles. Apple is selling for rupees 1,10,000 and Select Mobiles is reselling. Okay, he do resale for rupees 1,15,000. In this case, what Apple is doing? Apple is not keeping Select Mobiles as commission agent. Apple is selling for 1,10,000. Whenever Apple has sold, risk and reward of iPhone is transferred to Select Mobiles. Select Mobiles is reselling in India for 1,15,000. Profit margin of Select Mobiles is 5,000 rupees. Are you able to understand? So in this case, if Select Mobile resells in India and makes money of 1,15,000, total 1,15,000 is treated as turnover of Select Mobiles. Very simple. Whether the person in India is he agent or reseller. If person in India is agent, only commission will be treated as turnover. If person in India is reseller, then total amount received on sales will be taken as turnover. Okay. Next, speculative transactions. Give me 1 second. In case of speculative transactions, turnover is equal to absolute total of positive and negative differences, profit or loss. What is best example of speculative business? Best example of speculative business is intraday trading. Let's say I am doing intraday trading. I bought and sold Reliance shares today itself. I got profit of 18,000. Next, today I bought and sold Adani shares. I got loss. I got loss of 20,000. Today I bought and sold Infosys shares. I got profit of 30,000. Today I bought and sold TCS shares. I got loss of 10,000 rupees. Now, how to calculate the turnover? When you are calculating the turnover, the thing is, whenever you are calculating the turnover, you should ignore whether it is positive or negative. You should take absolute figure. You should take 18,000. It is negative. Even though it is negative, you have to take absolute figure. Absolute figure means what? Irrespective of plus or minus, whatever the amount is there, profit or loss, that amount should be taken. So absolute figures are to be taken. So 20,000, 30,000, 10,000. So my today's turnover is 10 plus 30, 40 plus 20, 60 plus 18, 78,000 is turnover. Are you able to understand? So whenever you are doing speculative business, in speculative business, for each transaction, whatever profit amount is there, whatever loss amount is there, you have to add all profits and all losses. You have to take absolute figure while calculating the turnover. Are you able to understand? While calculating turnover of derivatives, in case of futures also, absolute profit plus loss. What do you mean by this? You know futures, right? In your financial management, you have studied about futures. Whenever you are dealing in futures, either you will get profit or you will get loss. So whatever the profit amount is there, whatever the loss amount is there, total profits and total losses are to be added. You have to take absolute figures. So you have to take absolute profit plus loss, that will be taken as turnover. Are you able to understand? In case of options, turnover is equal to absolute profit or loss plus premium on sale of options. What do you mean by this? Let's say I am HDFC Bank. What I have done, I purchased buy option for 85 rupees. I sold buy option for rupees 87 plus 3 rupees premium. 3 rupees premium. That means what? I am banker. Internationally, I am buying option at 85. And internationally, I am also selling the option at 87. Now, how much is my profit? My profit is 87 minus 85. My profit is 2 rupees. Next, whenever I sell buy option, how much amount I receive? Whenever I sell buy option, I will get absolute profit or loss plus premium on sale of options. So whenever I sell option, whenever I sell 87 rupees option, how much premium I have received? I have received premium of 3 rupees. So how much is my turnover? My turnover is 5 rupees. Are you able to understand? So whenever you are dealing with options, in case of option, premium component is involved. In case of futures, there is no concept of premium, but in case of options, there will be premium. So whenever you are dealing in options, what you will do, you will take absolute profit or loss. Along with that, you will also consider premium on sale of options. That will be taken as turnover. So in this case, my turnover is 5 rupees. Are you able to understand? I have taken profit or loss, and along with that, I have taken premium on sale of option. 5 rupees will be taken as turnover. Next, open positions at year end, turnover counted in the year when squared off. What do you mean by this? Let's say on 22nd March 2025, I purchased buy option for rupees 90 on 20 April 25. Now tell me when this transaction will square off. I purchased on 22nd March, but this transaction will square off in 20 April 25. That means this transaction will square off in 25-26. So whatever turnover of this transaction is there, the turnover will be recognized in 25-26. The turnover will not be recognized in 24-25. That means as on 31st March of the previous year, if any option or if any future is not squared off, don't consider its turnover. Consider its turnover in the year in which that transaction is actually squared off. Okay. Yes. One doubt asked is, in options we get loss. It added to the turnover or not? Yes, it will be added. For example, in this case, I purchased option for 85. I sold option for 81. Is there profit or loss? There is loss. 85 minus 81. My loss is minus 4 rupees. Even though it is minus 4, we need to take absolute figure. How much is absolute figure? 4. Plus how much is the premium I have received? 3. Total 7 rupees will be treated as turnover. Are you able to understand? So, whenever you are dealing with derivatives, either option or future, in that transaction, whether you get profit or you get loss, you will take only absolute figure. To that you will add premium, that will be treated as turnover. Are you able to understand? You can see here absolute profit or loss. Loss also I have considered. Okay. So this is the definition of turnover. Now shall I start definition of gross receipts? Yeah, I know the explanation is a bit lengthy because so much of concept is there, in-depth concept is there, and this is the first time tax audit is inserted in CMA final. All cost accountants are fighting for tax audit signature. High chances in examination he will ask very in-depth questions about tax audit. That is the reason I am discussing very clearly. Okay. Gross receipts. All business related receipts, whether against sale or otherwise, are to be included. See, turnover means what? Turnover means only sales, either sale of goods or sale of services. Gross receipts are not like that. Gross receipts include like business related receipts. Gross receipts can be related to sales or they can be other than related to sales will also be considered as gross receipts. Best example, you received insurance. There is loss of stock. For loss of stock, you received insurance. Whatever the insurance that you have received, it is not sale of goods. It is not sale of services. Still, it will be considered as gross receipts. Quite often, we use the terms turnover, gross receipts simultaneously, but there is difference. Turnover speaks only about sale of goods or sale of services. Gross receipts speaks about sales as well as some other components. Are you able to understand? Now, you can see all amounts, cash or kind, arising from business normally taxable as business income. Cash assistance from government for exports. If you remember in PGBP chapter, when I am explaining charging section 28, I have explained very clearly cash assistance from government. See, I am doing 50 crore exports. Government is very impressed. I am doing more exports. If I do more exports, I will get more foreign currency. When more foreign currency comes to India, Indian economy will increase. That's why as I am doing more exports, government gave cash assistance of 15 lakh rupees to me, or government gave cash assistance of 17 lakh rupees to me. So I have done 50 crore rupees exports. How much reward is given by government? 17 lakhs reward is given by government. Whatever 17 lakhs reward given is there, this is taxable and under PGBP head. Now whatever 17 lakhs reward received is there, that is also treated as gross receipts. Are you able to understand? Whether a business recovers expenses like packing, forwarding, freight, insurance from its customers, these amounts are called as reimbursements. If such reimbursements are mixed in sales, they form part of turnover. If they are kept in a separate account, only net surplus is counted as turnover. What do you mean by this? Let's say I wanted to buy Mercedes car from Germany. Okay, now Mercedes car. I have two options. Option 1, company sells car for 2 crores. Transportation is done by company. Insurance is paid by company. Ultimately, I need to pay only 2 crore rupees to company. In this case, transportation charges are included in 2 crores. Insurance are also included in 2 crores. In this case, turnover of turnover of Mercedes is equal to 2 crores. Option 2, let's say car cost is 1.8 crore. Let's say transportation is 10 lakhs, insurance is 5 lakhs. I told Mercedes, don't pay transportation, don't pay insurance. I will pay transportation, I will pay insurance. That means what? Ultimately, to transporter, Mercedes is paying 10 lakh rupees. Ultimately, to insurance company, Mercedes is paying 5 lakh rupees. But who is giving 5 lakh rupees? I am reimbursing 5 lakh rupees to Mercedes company. That means what? Mercedes paid for transportation 10 lakhs. Mercedes paid 5 lakhs for insurance company. Whatever the expenditure incurred by Mercedes is there for transporting car from Germany to India, that expenditure is reimbursed by me. Whenever I reimburse the expenditure and it is clearly mentioned in the invoice, in that case, only 1.8 crores will be taken as turnover. Are you able to understand? So, whatever the reimbursements are there, if reimbursements are clearly shown in the invoice and separate ledger is maintained by seller, in that case, whatever the sale component is there, only that will be taken as turnover. If transportation charges, whatever the reimbursements are there, for them if separate account is not maintained, then total value will be taken as turnover. Are you able to understand? So simple. Reimbursements mixed in sales. Then whatever transportation charges, insurance, reimbursements are there, they will also be treated as turnover. However, if separate account is maintained, only whatever the actual sale value is there, only that will be taken as turnover. Okay. Next. Net exchange rate difference on export of sales done in foreign currency. What do you mean by this? On 10th October 2025, I sold goods. Sale value is equal to $1 lakh. How much? $1 lakh. On 1st October, $1 is equal to 85 rupees. Now, on 15th December 25, I received $1 lakh. I sold on credit basis. Immediately, I did not get money. I got money on 15th December 2025. How much I got? $1 lakh I got. On 15th December 25, $1 is equal to 87 rupees. Now, how much is exchange gain? I sold for $1 lakh. I also received $1 lakh. But exchange rate is different on date of sale and on date of receipt of $1 lakh. Sir, koncham PGBP, yeah, someone is asking to revise PGBP. After this amendments chapter, I am going to revise all the chapters that I have discussed in question paper analysis. In question paper analysis, I have told only from 8 chapters. He is asking all the questions. All those chapters will be revised. When I am revising those chapters, PGBP will also be revised. Okay. Now, here, how much is exchange gain? Exchange gain is equal to 2 rupees, correct? Now, 2 rupees into how many dollars? $1 lakh. Exchange gain is rupees 2 lakhs. Even exchange gain is also treated as gross receipts. Are you able to understand? So, whenever you are doing exports, because of that exports, if you get any exchange gain, even that exchange gain is also treated as gross receipts. So net exchange rate difference on export of sales done in foreign currency. Next, liquidated damages. What do you mean by liquidated damages? Liquidated damages are nothing but compensation for breach of contract. Breach of contract. Let's say I am tire manufacturing company, MRF. I entered into agreement with Tata Motors. I will sell 1 lakh tires to Tata Motors. But after 1 month, Tata Motors violated the terms and conditions of the agreement. Tata Motors said, we don't want 1 lakh tires, we want only 20,000 tires. Now, as per agreement, I manufactured 1 lakh tires, but Tata Motors is not purchasing 1 lakh tires. Tata Motors is purchasing only 20,000 tires. Now, what I will do, I will file case against Tata Motors because as per agreement, Tata Limited should purchase 1 lakh tires from me. Now, Tata Limited breached the contract. For breaching the contract, Tata Limited paid me compensation 30 crore rupees. Now whatever 30 crore rupees compensation I received from Tata Limited is there, that we call as liquidated damages. Are you able to understand? So whatever the liquidated damages are there, they will also be treated as gross receipts. Next, insurance claims except for fixed assets. See, there is damage of stock. For that you received insurance amount. Insurance amount is not turnover, but insurance amount will be treated as gross receipts. Are you able to understand? So whenever you receive insurance compensation other than for fixed assets, for goods or for any other assets, if you receive any insurance compensation is also treated as gross receipts. Next, lease rent, that means whatever the rental income is there, that will also be treated as gross receipts. Hire charges, installments, you know hire purchase, right? In hire purchase, whatever the installment amount is there, okay, hire charges are there, they will be treated as gross receipts. Next, advance received and forfeited, it is like non-refundable advance. Whatever the non-refundable advance, see, let's say a party came to me, I told him I will sell 1 lakh cars to opposite party, but how can I enter into contract? There should be some assurance, right? So opposite party gave me 20 crores advance, I have taken 20 crore advance, I have given him assurance after 6 months I will sell 1 lakh cars to opposite party. Now 20 crores advance I have received. After 6 months, he should make payment for all 1 lakh cars. If he do not make payment for 1 lakh cars, whatever the advance I have taken, I will not give back to him. So whatever the advance that I am not giving back, that advance we call as non-refundable advance. So if I take any advance for sale of goods and afterwards that sale contract could not materialize, that sale contract is cancelled, I will not give back the advance. Whatever the advance that is not given back is there, isn't it income to me? Yes. Whatever the non-refundable advance that is forfeited, that is cancelled, that is not given back, that non-refundable advance will be treated as gross receipts. Are you able to understand? Value of business benefits or perquisites convertible into money or not. Let's say I went to do audit, Lalita Jewelry. I said audit fees is 5 lakh rupees. After audit, Lalita Jewelry paid me 5 lakh rupees. Lalita Jewelry owner, okay, Gundu boss will be there, right? He is very much happy with my audit. He gave me one gold ring. Now, whatever the gold ring is there, that is benefit received by me because of my profession. That is perquisite. Whatever the perquisites that are received during the course of profession are there, they will also be treated as gross receipts. Okay. Next, gross receipts exclude agricultural receipts. The thing is, agricultural income is not taxable under income tax. So if you receive any agricultural income, don't consider agricultural income in calculation of gross receipts. Okay. Rental income taxable under house property or other sources. See, here whatever the rental income is there, lease rent. If lease rent is taxable under PGBP, then that rental income is considered in calculation of gross receipts. Okay. For example, my main business is buying house properties and giving house properties on rent. If my main business is giving house properties on rent, rental income will be treated as business income to me, correct? So whatever the business income is there, rental income, that will be treated as gross receipts. But if rental income is taxable under house property or other sources, then it will not be treated as gross receipts. Next, dividend. If my main business is buying and selling of shares, then shares are stock in trade to me. If shares are stock in trade to me, then whatever the dividend is there, dividend will be considered as business income. If shares are not stock in trade, my main profession is teaching, but randomly I will buy and sell shares, I will receive dividend income. Now this dividend income is not taxable under PGBP, it is taxable under IFOS, income from other sources. Next, interest income. See, My main business is money lending business. I am into finance business. I will give loans. I will take interest. If my main business is money lending business, interest income is taxable under PGBP. That interest income will be considered in calculation of gross receipts. But if my main business is not money lending business, like I deposited some money in fixed deposit, I received interest income. Whatever the interest income that I have received, that is not taxable under PGBP, that is taxable under IFOS. If it is taxable under IFOS, it will not be considered in calculation of gross receipts. Yeah, one doubt was asked. Sir, what if the agricultural land is located in urban area? If agricultural land is located in urban area, still whatever the revenue income that is received from urban agricultural land, you received agricultural income. That agricultural income is not taxable. That agricultural income is fully exempt, and that agricultural income will not be considered in calculation of gross receipts. Okay. Next. Reimbursement of actual fare by a travel agent is to be excluded from gross receipts. However, if he runs a tour package and charges lump sum, entire package is included in gross receipts. What do you mean by this? Let's say, for example, I am make my trip. You know make my trip, right? I am make my trip. What I have done? I purchased flight ticket for rupees 8,000 per customer. Whenever customer comes, there are two cases. Case 1, case 2. I told to customer the flight ticket cost, I sold flight ticket for rupees 10,000. In this case, total 10,000 will be taken as turnover. Turnover is equal to 10,000 because I bought flight ticket for 8,000. I sold flight ticket for 10,000. So I am selling flight ticket for 10,000. How much is the money received? 10,000 is the money received. That will be treated as turnover. Case 2, I sold, like I told to customer very clearly, purchase cost to me is 8,000 and my margin is 1,500. Whenever I disclose this in properly, total 9,500. Whenever I disclose like this clearly, in this case, I am disclosing to customer, my cost is 8,000 rupees, profit is 1,500, total 9,500. In this case, only 1,500 will be taken as turnover. Are you able to understand? So, in case of tour operator, if he discloses his margin clearly in the invoice, then whatever the margin is there, that will be taken as turnover, and whatever the purchase cost is there, this will be treated as reimbursement. Okay. If I do not disclose, if I sell for lump sum amount, okay, then whatever lump sum amount is there, total lump sum amount will be treated as turnover. Okay. Next. Share of profit, interest and remuneration received by partner. See, in case of partnership firm, partner will get share of profit, partner will get interest from partnership firm, partner will get remuneration from partnership firm. All these are not treated as turnover or gross receipts of individual partner. Are you able to understand? So, they are not treated as gross receipts in the hands of partner. Next. Write back of creditor liabilities is business income but not included in turnover for section 44AB. What do you mean by this? Let's say there is one individual, his name is Priyatam. He is my client, for example. Priyatam is in cotton business. So he is client and I am the auditor. For 24-25, I have done audit. I said my audit fees is 1 lakh rupees. So what Preetham has done in P&L account, he has written audit fees 1 lakh rupees. In 25-26, see, on accrual basis this was recognized. On accrual basis. Preetham did not give me 1 lakh rupees, but on accrual basis, I recognized 1 lakh rupees on accrual basis, but whether Preetham paid me audit fees of 1 lakh rupees? No, Preetham did not pay me audit fees of 1 lakh rupees. Now, Preetham said he will pay 1 lakh rupees in 25-26. In 25-26, Preetham said, who will pay 1 lakh rupees audit fees for the work that you have done? I will pay only 60,000 rupees audit fees. So in 25-26, how much audit fees I have received? Out of 1 lakh rupees, 60,000 fees is received. Balance 40,000 rupees. Preetham said he will not give 40,000 rupees. I also waived off. Now tell me whether 40,000, isn't it income to Preetham? Yes, 40,000 is income to Preetham because in 24-25 he recognized 1 lakh as expenditure. But whether actual expenditure is 1 lakh? No, actual expenditure is only 60,000. So in 25-26 what we will do? By audit fees waived off. How much audit fees waived off? 40,000 rupees. That will be recognized as income. So that net expenditure, how much? 60,000 will be booked in books of accounts. Now in 25-26, 40,000 rupees is recognized as income, right? But this will not be treated as gross receipts. Are you able to understand? So in case of cancellation of liability or reduction of liability, whatever the liability that is cancelled, whatever the liability that is reduced, it is income, but that income will not be treated as gross receipts. Okay. So did you understand this point? Write back of creditor liabilities, remission or cessation is business income but not included in turnover of section 44A. This is the definition of turnover and gross receipts. So when you are calculating the limit of that 1 crore 50 lakhs, all these items are to be considered. Okay. Next, audit report. Now we are going to discuss about audit report. How tax auditor, how will he do the audit, and how will he prepare the tax audit report? How many clauses are there in tax audit report? All those we are going to discuss very clearly now. Please don't think I am discussing very lengthily because it is new topic and questions are expected. That's why I'm discussing each point very clearly to the extent possible. That's why the lecture is a bit lengthy, but it is pretty useful for you. Tomorrow, if tax auditor status is given to cost accounting, you also should do tax audit, right? For that, this knowledge is very much useful. Okay. Form 3CA and 3CB. Form 3CA, 3CD. For example, there is one company. Company is required to get audited under Companies Act. audited under Companies Act. If any entity is required to be audited under any other law and audit is done, that means if already books of accounts are verified by auditor under any other law, in that case, again from tax audit is not required to be done from scratch. Tax auditor is required to prepare audit report in 3CD and it is sufficient to give that tax audit report. Are you able to understand? So, for example, in case of any person, books are already audited under previous law, under any other law, then which form is applicable? Form 3CA 3CD is applicable. If books are not audited under any law, then which form is applicable? Form 3CB 3CD is applicable. If books of accounts are already audited under any other law, in that case, from scratch, audit will not be done. What tax auditor will do? Tax auditor will enclose, that means attach. Enclose means nothing but attach. He will attach audited financial statements and audit report under other law, and he will give his audit report, tax audit report will be given. Tax audit report will be given in form 3CA and 3CD. See, already books are audited under Companies Act. Then again, why to do audit from the beginning? So what tax auditor will do? Tax auditor will go through the statutory audit report. That statutory audit report will be enclosed, attached with tax audit report. And whatever the audited financial statements are there, audited financial statements will also be attached along with tax audit report. And tax audit report will be given in form 3CA and 3CD. Sir, can you share the lecture notes? Yes, I will share the lecture notes once lecture is completed. Even these notes will also be shared with you, not a problem. Now, if books are not audited under any law, from scratch, books are to be audited. From scratch, books will be audited by tax auditor. Books will be audited by tax auditor. And tax auditor will give report in form 3CB 3CD. Let's say I am individual. I have done turnover of 40 crores. For me, tax audit is applicable. Whether individual is required to get his books of accounts audited under Companies Act? No, Companies Act is applicable for companies, not individual. Am I required to get books of accounts audited under LLP Act? No, LLP Act is applicable for LLPs. Individual is not LLP. I am not required to get books of accounts audited under any other law. Now, whenever tax auditor do my audit, he will do audit from scratch. Every document will be verified by tax auditor and he will give report in form 3CB and 3CD. Are you able to understand? Form 3CB 3CD. Very simple. You can see when 3CA 3CD applies to a person who is required under any law to get its accounts audited. 3CB 3CD is applicable where accounts are not required to be audited under any other law. I hope you understood the difference between 3CA 3CD. When 3CA 3CD is applicable, when books of accounts are required to be audited under any law, 3CA 3CD is applicable. When books of accounts are not required to be audited, then form 3CB and 3CD is applicable. That is the difference. And I am expecting one MCQ. At least in examination, he will ask one MCQ relating to 3CA, 3CD, 3CB, 3CD. Okay, remember carefully. Form 3CA, if SSC accounts are already audited under another law, Companies Act. So already audited under another law, 3CA is applicable. If they are not required to be audited, then Form 3CB is applicable. Next. See, for 3CA, 3CB, for both 3CD is required to be given. Auditor relies on, must be accompanied with Form 3CD. So, whether auditor is giving 3CA or whether auditor is giving 3CB, for 3CA, 3CB, for both reports, 3CD is also to be attached. What 3CD is? 3CD discusses about statement of particulars. So, there are around 44 clauses. For all 44 clauses, tax auditor is required to answer. All 44 clauses together we call as Form 3CD. So in Form 3CD, 44 questions will be asked. For all those 44 questions, auditor has to answer. And whatever the answers given by auditor for those 44 questions is there, that form we call as Form 3CD. Are you able to understand? And in case of 3CA, as books of accounts are already audited. Now, statutory audit report is required to be given. Audited financial statements are required to be given. Audit is not required to be conducted from scratch. Only Form 3CD is required to be given. Next. Annexures, I have told you, audited financial statements are required to be given. Statutory audit report, Form 3CD. Under Form 3CB, everything is done by chartered accountant, tax auditor from scratch. That's why copy of audited financial statements and Form 3CD is required to be given. If tax auditor have any observations, those observations are to be given. Qualifications. Qualifications means you have studied in audit, nothing but observations of auditor. Qualifications in statutory auditor's report must be considered. If auditor has any differences of opinion, it must be reported in para 5 of Form 3CB. Sir, which type of questions we can expect from tax audit, practical or theory? Practical question may come, theory question may also come. Difference between 3CA and 3CB. This theory question is highly anticipated. Yesterday we discussed the practical questions. Such type of practical questions may also come. Sir, you said tax audit is required to be done. If tax audit is not done, okay, what is the consequence? If tax audit is not done, then penalty will be levied. How much is penalty? 0.5% of total sales, turnover or gross receipts, or 1,50,000, whichever is lower. Yesterday we have discussed what is due date for filing tax audit report. What is due date? Due date for filing tax audit report is 30th September of assessment year. Current month, September. So September month last date, 30th September is last date for tax audits. If tax audit is not done before 30th September, after 30th September, if tax audit is done, then penalty will be levied. How much is the penalty? Penalty is equal to 0.5% of turnover or 1,50,000, whichever is lower. Are you able to understand? That is the penalty which will be levied. Mode of submitting audit report. Nowadays, there is no manual procedure. Audit report is also required to be submitted electronically. And we as a chartered accountants, we need to do signature on tax audit report, right? We do not do manual signature. We do signature through DSC, digital signature. So tax audit report is required to be submitted nowadays electronically, and tax auditor will also do signature. He will do digital signature. Even SSC will also do digital signature. Okay. Sir, you said if tax audit is not done before 30th September, penalty is 0.5% of turnover or 1,50,000, whichever is lower. Is there any chance for waiver of penalty? Yes. If there is reasonable cause, then no penalty will be levied under section 271B. What can be reasonable cause? There are many case laws based on various instances accepted by judiciary. That means based on various cases accepted by courts. These are the various cases. Auditor resigned. Auditor resigned and new auditor is appointed. It took 4 months of time. Because auditor resigned, tax audit report could not be submitted before 30th September. It is a valid cause. In that case, penalty was waived off. All these are valid causes for late submitting of tax audit report. So in all these valid causes, no penalty will be levied. Are you able to understand? So let's say there is death or illness of partner in charge. See, proprietor is in ICU. If without proprietor, how can tax audit report will be signed and submitted to income tax department? So like if there is any medical reasons or if there is portal issues, income tax e-filing portal is not working properly, how to submit tax audit report? So all these are valid causes. In these cases, like court has waived off the penalty of 1,50,000 rupees. Are you able to understand? If books of accounts are not maintained, see, books of accounts are required to be maintained as per 44AA. What 44AA says? If books of accounts are not maintained, then penalty is 25,000. Now, income tax department came. I am not maintaining books of accounts. I need to pay penalty of 25,000. I paid penalty of 25,000. Now, if books of accounts are not maintained, how tax audit will be done? So I have not done tax audit also. So if books of accounts are not maintained, penalty 25,000 is levied. If books of accounts are not there, tax audit cannot be done. So that's why tax audit penalty will not be levied. Are you able to understand? So like this is interesting case law. In one case law, SSE is not maintaining books of accounts. So department levied penalty for not getting tax audit done. Penalty is 0.5% of turnover or 1,50,000, whichever is lower. Now, SSE argued before the judge, sir, I am not maintaining books of accounts. How can tax audit penalty will be levied? If books of accounts are not maintained, penalty should be levied as per section 44AA. I will pay penalty of 25,000. Judge accepted and SSE paid 25,000 penalty. SSE argued, sir, if books of accounts are only not maintained, how can tax audit is done? You are already levying penalty for non-maintenance of books of accounts. I paid that penalty. Then how can tax audit be done? So judge waived off penalty of tax audit. Penalty of tax audit is 1,50,000. Instead of paying 1,50,000, 25,000 penalty is paid and case was closed. Are you able to understand? Interesting case law. Okay. So he argued in such a way that books are not maintained, so tax audit cannot be done. If tax audit cannot be done, why penalty is levied under tax audit? So penalty under tax audit is waived off and penalty for non-maintenance of books of accounts, 25,000 is levied and 25,000 is paid by SSC. Are you able to understand? Next, revision of tax audit report. Sir, whether tax audit report can be revised? Yes, tax audit report can be revised. Sir, how many times tax audit report can be revised? It can be revised for any number of times. So once tax audit report is submitted, if there are any subsequent changes, tax auditor can file revised tax audit report. How many times he can file revised tax audit report? He can file for any number of times. Next, we will discuss annexures. I told how many clauses are there? 44 clauses are there in Form 3CD. Okay. What, like they are divided into two parts. Part A, basic details. Part B, detailed particulars of compliance with Income Tax Act. Now let us start looking at basic details and detailed particulars. You can see basic details. Name of the SSC is required to be given as per PAN. See, let's say I am doing audit of ABC Private Limited. I am doing tax audit of ABC Private Limited. I have to answer 44 questions, right? Question number 1 is, what is the name of the SSC? I have to write the legal name of the SSC. If there is a trade name, I will also write trade name. Are you able to understand? So whatever the legal name of the SSC and trade name of the SSC is the question 1. Okay, I have to answer that question. I will write the legal name of ABC Private Limited is ABC Private Limited. If there is any other trade name, I will write the trade name also. In question number 2, I will write registered office address of ABC Private Limited. In question number 3, I will write PAN number of ABC Private Limited. See, Aadhaar number will not be there for company. I will not write Aadhaar number. If I am doing tax audit of individual, for individual Aadhaar number is there. Optional, if I want to give, I can mention Aadhaar number also, but PAN number I need to mandatorily give. Okay. Next, for ABC Private Limited, if there is any GST registration certificate, I will mention GST number, GSTIN. If there is any customs registration, export registration or import registration, IEC code will be there, import export code. Okay, I will mention that import export code also. That is question number 4. Question number 5, I will mention status of the SSC. Whether ABC Private Limited, is it individual, company, LLP, AOP, BOI? It is company, right? I will write ABC Private Limited is a company. That is question number 5. Next, I will write previous year. I will also write assessment year. See, nothing but audit report. After doing the audit, whatever the opinion of auditor is there, that is given in 3CA, 3CB. Okay, if there are any observations of auditor, those observations will be given in 3CA, 3CB. After giving audit report, we also need to give 3CD. Auditor should answer 44 questions. All those 44 questions are kept in Form 3CD. Along with audit report, Form 3CD is also required to be given. Okay. Sir, what is the time limit for revision of tax audit? Tax audit can be revised till the end of assessment year. Okay. Till the completion of assessment year, tax audit can be revised. Okay. Next, question number 8. Clause of section 44AB, A to E, under which audit is conducted. See, tax audit is required to be conducted under section 44AB. Tax audit. Under 44AB, there are clauses. Clause A, Clause B, Clause C, Clause D, Clause E. Under which clause you are required to get tax audit done? That clause is to be specifically mentioned under section 44AB. Okay. Next, we have discussed in regular class, there are optional tax rates 115 BAC and alternative tax rates 115 BAA, BAB, BAD, BAE. If SSC is paying taxes under 115 series, then you have to answer clause 8A, under which section SSC is paying taxes, 115 BAA or 115 BAB. That section is to be clearly mentioned in tax audit report. Okay. Next, part B. Part A, very simple, basic questions, name, address, PAN number, GST number, like this. Part B, very important, listen carefully. In case of part B, question number 9. If you are doing tax audit of a partnership firm, who are the partners? Who are the members in the company? All those members list along with PAN number is required to be given. I am doing tax audit of ABC Private Limited. Whoever the shareholders of ABC Private Limited, all the names of the shareholders are to be given along with PAN numbers. Okay. So names are to be given. Profit sharing ratio. So if I am doing tax audit of partnership firm, what is the profit sharing ratio? That is to be given. And in current year, if there is any change in profit sharing ratio, you know, at the time of admission, retirement or change in constitution, there will be change in profit sharing ratio. The change in profit sharing ratio is also required to be disclosed properly in question number 9. Next, question number 10. What is the nature of business or profession? Company is engaged in which type of business? Real estate business or wholesale business or retail business or service oriented business? What is the nature of business? That is to be clearly given in question number 9. Next, that is to be clearly given in question number 10. Next, question number 11. What are the books of accounts required to be maintained? Prescribed means what? Required to be maintained. For example, doctor is there. Doctor is required to maintain books of accounts as per Rule 6F. Daily case register is required to be maintained. Opening and closing stock of medicines are required to be maintained. So whatever the books of accounts that are required to be maintained, that question is to be answered in question number 11. And what are the books of accounts actually maintained by SSC? Where those books of accounts are maintained? Okay, in which address books of accounts are maintained? If books of accounts are maintained online, we need to give IP address. Okay, that laptop or computer IP address where books of accounts are maintained, that IP address is also required to be given. And whatever the books of accounts examined by, that means what? Verified by tax auditor. So 3 questions, 3 answers you have to given in clause 11. In clause 11, you have to tell what are the books of accounts required to be maintained, what are the books of accounts actually maintained, and what are the books of accounts verified by tax auditor. All these 3 answers are required to be given in clause 11. Next, clause 12. Presumptive income disclosure. See whether SSC is disclosing income for any business under 44 AD, 44 ADA, 44 AE. So that presumptive income disclosure is also required to be given. Next, clause 13, method of accounting, changes and ICDS. What is the method of accounting followed by SSC? Accrual basis or cash basis? Company is there. As per Companies Act, it is mandatorily follow accrual basis, mercantile system of accounting. So we will write what is the method of accounting followed by SSC in clause number 13. And in current year, is there any change in method of accounting? If there is change in method of accounting, what is the impact of change in method of accounting? That is to be answered in question number 13. Next, question number 14. Method of valuation of closing stock. You know valuation of closing stock, right? Closing stock will be valued as per ICDS 2, either on FIFO basis or on LIFO basis. So what is the method of valuation of closing stock? That is to be clearly answered in clause number 14. Next, in case of conversion of capital asset into stock in trade, you know conversion of capital asset into stock in trade, right? Section 45(2). This we have discussed very clearly in capital gains chapter. So is there any conversion of capital asset into stock in trade? If so, what is the date of purchase of capital asset? What is the date of conversion? What is the fair market value on the date of conversion? How much is capital gains? How much is PGBP income? All that information is clearly to be given in clause number 15. Clause number 16. Items not credited to P&L account. See, export incentives. If you get any insurance compensation, they are to be credited to P&L account. They are to be treated as PGBP income. If any items are not included in calculation of PGBP income, tax auditor should clearly specify export incentive is received but it is not treated as income. As SSC did not treat it as income, in tax audit report in clause number 16, tax auditor should clearly mention export incentive received, it is taxable under PGBP but it is not credited to P&L account. That observation is to be clearly written in clause number 16. Okay, next. In case of transfer of immovable property, we have discussed section 50C, section 43 CA. Whenever immovable property is transferred, stamp duty value will be there. If stamp duty value is greater than 110% of actual consideration, stamp duty value will be taken as full value of consideration. If stamp duty value is less than or equal to 110% of actual consideration, then actual consideration will be taken as full value of consideration. So whatever section 50C, 43CA is there, if any immovable property is sold in current previous year, then 50C, 43CA is applicable. Those observations are also required to be answered. See, all these clauses, just like newspaper reading, please read. Okay, you need not do by heart. You need not remember everything, because in examination he will not ask write all 44 clauses of 3CD. That question will not come, but he will test. Okay, whether any information is required to be given in 3CD or not. So let's say in question asked whether GST number is required to be given in 3CD. Yes, you have to give the answer. Yes, GST number is given, required to be given in 3CD in part A. You should be able to answer like that. So you need not do butty. Okay. You just read all the clauses just like newspaper reading and try to remember the important points sufficient. You need not do butty of all 44 clauses. Theory question will not be asked. Next, depreciation. You all know under income tax, depreciation is calculated blockwise. So that depreciation details are required to be given in clause number 18. How you calculated depreciation? How much is opening written down value? How much is the depreciation amount? How much is the closing written down value? That is required to be given. Next. Deductions under section 33AB, 33ABA, 35. We have discussed section 35, scientific research. So, if any deduction is claimed under 33AB, 33ABA, 35, whether the deduction is properly calculated and properly claimed as deduction or not, auditor has to verify and auditor has to write his observation in question number 19. Okay. Next, question number 20, employee payments. See, employee like EPF, employee provident fund, employee ESI, that amount is collected from employee and it will deposited to government by employer. So when it comes to provident fund, okay, what is the amount collected from employee? What is the amount deposited to EPF account? Whether amount is deposited before due date or not? All these questions, what is the nature of fund? How much amount is taken from employees? What is due date? What is the actual amount paid, what is the actual date of payment? All these answers are to be given by tax auditor. Okay. And bonus or commission, if any bonus or commission is paid to employee, such bonus or commission is allowed on cash basis. Whether bonus is really paid to employees, whether commission is really paid to employees, that is required to be written as answer by tax auditor in clause number 20. Okay. Clause number 21, very important. Write down, important. You need to remember clause 21. Shall I discuss clause 21? Inadmissible expenses. You all know in PGBP, some expenses are not allowed as deduction in P&L account. Capital expenditure is not allowed as deduction in P&L account. Personal expenditure is not allowed as deduction in P&L account. Political party advertisement expenditure, that is not allowed as deduction in P&L account. So what are the expenses that are not allowed as deduction in P&L account as per income tax provisions are there? All that information is required to be given by tax auditor. So what tax auditor will do? Tax auditor will verify books of accounts of Companies Act. In P&L account of Companies Act, what are the expenses? What are the amounts debited to P&L account but are not allowed as deduction, but are not allowed under Income Tax Act, but are not allowed under Income Tax Act. All that information is required to be given. Capital expenditure, personal expenditure, political party advertisement expenditure. If there are any club expenses of personal nature, they are also required to be added back. Okay, and if there are any expenses prohibited by law, we have discussed penalty is not allowed as deduction. For example, you are doing audit of transport company. Transport company paid challans to Road Transport Authority for violating the rules of Motor Vehicles Act. If any, let's say driver is going without license, challan was levied 10,000 rupees. 10,000 is paid by transport company. Why 10,000 was paid? It is the expenditure for violating Motor Vehicles Act. Now that 10,000 is not allowed as deduction. Are you able to understand? So if any penalty is paid, penalty is not allowed as deduction. So auditor has to verify all the expenses. Are there any expenses which are in the nature of penalty? If there are any expenses in the nature of penalty, they are not allowed as deduction. So those penalties are required to be reported in clause number 21. Okay, clause 21, very, very important. Don't skip. Okay, next 21, clause 21, subclause B. See, in regular course of business, whenever payment is done, TDS is required to be deducted. Whether TDS is deducted or not, auditor has to verify all the payments. Auditor has to report those transactions for which TDS is not deducted. So, an auditor has to verify if TDS is deducted, whether it is paid to government or not. After deduction of TDS, if TDS is not paid to government, what are those transactions? That information is required to be given. So, auditor has to report payments. Payments for which TDS is not deducted, payments for which TDS is deducted but not paid to government, okay, but not deposited by due date under section 139(1). All the information. So whenever you are doing tax audit, what are the transactions for which TDS is not deducted, that is required to be reported in clause 21 subclause B. If TDS is deducted, you have to check whether it is deposited to government or not. If it is not deposited to government, those transactions are also required to be given in clause 21 subclause B. Okay. Next, in case of partnership firm, maximum interest allowed is 12% simple interest. Maximum remuneration allowed is remuneration as per book profits. Actual remuneration to working partners or remuneration as per book profits, whichever is lower will be allowed. So you have to verify whether interest paid. You have to verify calculation of interest paid, calculation of remuneration. Whether interest paid is less than 12%. If interest paid is more than 12%, that information is required to be given in clause 21 subclause C. You have to verify whether remuneration is as per book profits. If remuneration paid is more than book profits, then extra remuneration is not allowed as deduction. That is also required to be given in clause C. Next, disallowance under section 40A3, 40A3A. You all know, if any per person per day, you should not make cash payment of more than 10,000. If you have made cash payment of more than 10,000, that is not allowed as deduction. So auditor has to report what are the transactions for which more than 10,000 cash payment is made. That is required to be disclosed in clause D. So entire PGBP, only if you have knowledge of all PGBP provisions, then only you will understand this 3CD clause, because as per PGBP provisions, if there is any violation, that violation is required to be reported in tax audit report. Are you able to understand? Next, gratuity. I have told you in class, provision for gratuity is not allowed as deduction. But if gratuity is really payable, if gratuity is paid, then it will be allowed as deduction. So with regard to gratuity, whatever the information is there, that is required to be given in clause E. Next, employer contribution. Employer contribution is allowed as per section 43B. Okay. So if employer contribution is actually paid, then only it will be allowed as deduction. Otherwise, it will not be allowed as deduction. So employer has to give details. What is the employer contribution? What is the due date? When it is actually paid? How much amount is actually paid? All this information is required to be given in clause 21 subclass F. Okay. Next, contingent liabilities. You know contingent liabilities, right? A case was filed against the company. We do not know whether we will win the case or we will lose the case. If we lose the case, we need to pay penalty of 50 lakh rupees. Now, 50 lakh rupees penalty is payable if we lose the case. So, we will write provision. We will recognize the provision for contingent liability. But provision for contingent liability is not allowed as deduction under income tax. So, if there is any provision created for contingent liability, that is required to be given in subclause Z. Next, expenditure relatable to exempt income. See, with regard to exempt income, for example, agricultural income is there. For earning agricultural income, you have incurred agricultural expenses. Agricultural expenses are not allowed as deduction under income tax. Sir, why agricultural expenses are not allowed as deduction under income tax? Because when you are getting agricultural income, no tax is there. That's why agricultural expenses are also not allowed as deduction under income tax. So are there any agricultural expenses or are there any expenses against exempt income? That information is required to be reported in subclause H. Next, interest on borrowings. We have discussed in case of capital asset, from date of purchase up to put to use, whatever the interest is there, that interest will be capitalized. After put to use, whatever the interest is there, that will be debited to P&L account. That information is required to be given properly in clause I, subclause I. Okay. Next, any amount not allowable under section 43B(H). What do you mean by this? Recently, a provision was introduced, MSMEs. If there is agreement, as per the agreement, whatever the due date is there, within the due date, payment should be made to MSME. Then only allowed as deduction on accrual basis or allowed as deduction on cash basis. If there is no agreement, then payment should be made in 45 days. If payment is made in 45 days, allowed as deduction on accrual basis, otherwise allowed as deduction on cash basis. Tax auditor has to give the report. What are the payments made to MSMEs? That information is required to be given properly in clause 22. Okay. Next, 23. Particulars including PAN for payments to related parties. In current financial year 25-26, are there any payments made to related parties? If so, whatever the transactions with related parties are there, all those transactions are required to be given in clause 23. Are you able to understand? Next, even PAN number of related parties are also required to be given. Next, deemed profits under section 33AB, 33ABA. So as per 33AB, 33ABA, if there is any deemed profit, that is required to be disclosed in clause 24. Next, clause 25, particulars of deemed profits under section 41. For example, bad debts. You have written bad debts. You have write off bad debts. Subsequently, there is recovery of bad debts. Recovery of bad debts is treated as deemed profits under section 41. So, whatever the deemed profits under section 41 are there, they are required to be given in clause 25. Okay. Next, section 43B compliance. We know there are 6 payments covered under 43B. These 6 payments are allowed as deduction only on cash basis. Leave encashment, employer contribution to provident fund, statutory payments, interest on loan taken from specified financial institutions, and like amount payable to Indian Railways. All these payments are allowed as deduction on cash basis. So, are there any payments covered under 43B? If there are such payments, that information is required to be given in clause 26. Okay. Next, clause 27. Amount of ITC availed and its treatment in P&L account. You know about input tax credit, right? You would have studied in GST. What is the amount of ITC claimed under GST? And what if ITC is allowed? Okay. If ITC is not allowed, then it is the cost. That ITC amount will be debited to P&L account. That input tax credit particulars are required to be given in clause 27. Okay. Next, clause 28. It was there once upon a time. Now clause 28 is removed. It is no longer applicable. Next, clause 29A. Report forfeited capital asset advances. We have discussed. If any advance is received for capital asset and that advance is forfeited. If forfeiture happens before 1st April 2014, advance forfeited will be reduced from cost of acquisition. If advance is forfeited on or after 1st April 2014, then advance forfeited is taxable under other sources. That advance forfeited information is required to be given in clause 29A. And if there are any gifts received which are taxable under other sources, that information is required to be given in clause 29B. See how much exhaustive. Doing tax audit is not simple. When you are doing tax audit, even though you do not do tax audit, if you answer all these 44 questions, it's like you have done tax audit only. So as a control, chartered accountant can do or cannot do tax audit. He can blindly do the signature. That's why 3CD was introduced. Tax auditor has to answer 44 questions. So income tax department, in those 44 questions, it asked all the questions. Chartered accountant has to verify all books of accounts to write answers for these 44 questions. Okay. See how much information is asked in 44 clauses. Almost every information is asked. Correct? Next. Clause 30. Report if any borrowing repayment on hundi is made other than account pay check. Hundi means what? Like unauthorized promissory note. Let's say I took one paper. On that paper I have written I will pay 2 crore rupees to Mr. Preetham after 2 months. I gave that paper. Income tax department has done raid. In Preetham house they found the paper on which I have signed I will give 2 crore rupees to Preetham. Whatever the paper which is not promissory note, plain paper on which I have written I will pay 20 crore rupees is there, that we can call as hundi. Okay, so hundi means it is unauthorized note. So using unauthorized note, if I give money to any person or if I have taken any money from another person, that amount will be treated as undisclosed income and on that 78% tax is applicable. So are there any money taken on the basis of hundi or not? That information is required to be given in clause 30. Next, clause 30A, primary adjustment. Super point we discussed in transfer pricing. Primary adjustment means difference between arm's length price and actual price. So, are there any international transactions done in current year? If so, whether transfer pricing provisions are applicable? Yes. If transfer pricing provisions are applicable, we need to calculate arm's length price and auditor has to give the information. What is the primary adjustment? What is the difference between arm's length price and actual price? That information is required to be submitted by chartered accountant. And what is the amount of adjustment? What is the excess money? Excess money should be repatriated to India. Otherwise, secondary adjustment. Excess money is deemed as loan given and on that interest income will be calculated. Correct? So all this information is required to be given by tax auditor in clause 30. Next, 30B. Whether assessee incurred interest more than 1 crore to associated enterprise, section 94B. Actually, section 94B, 7 marks question. In every attempt he is asking, when you take loan from associated enterprise, you will pay interest. Total interest is not allowed as deduction. Actual interest paid or 30% of EBI TDA will be allowed as deduction. So whether any loan is taken from associated enterprise, whether any interest is paid, that information is required to be given in clause 30B. Okay. Next, clause 30C. Report whether assessee entered into impermissible avoidance arrangement. We discussed GAR provisions, right? So whether assessee actually entered into any impermissible avoidance arrangement. If so, that information is required to be given in clause 30C. Next, clause 31. We have discussed section 269 SS. No one should take cash loan more than 20,000. No one should repay loan more than 20,000 rupees in cash. We have discussed in 269T. And whenever you are doing business, in business you should not take cash more than 2 lakh rupees. That is to be disclosed in 269 ST. So clause 31 is all about 269 SS, 269 ST, 269 T. Very, very important. I told clause 21. Clause 21 is very important. clause 31 is also very important. Mark down. So under clause 31, we are going to give information of 269SS, 269ST and 269T. Okay. Next, clause 32, it is all about losses. Are there any brought forward losses? Are there any brought forward unabsorbed depreciation? Are there any brought forward capital losses? All losses information is required to be given in clause 32. Next, clause 33, chapter 6A deductions. Whether SSC claimed any chapter 6A deductions. If so, all the conditions given under chapter 6A deductions, are they satisfied or not? That information is required to be given in clause 33. Under clause 34, we will give TAN number. There will be TAN number, right? TDS collection, deduction and collection account number. So, what is the TAN number of ABC Private Limited? That TAN number is required to be given. Whether ABC Limited has done TDS deduction or not, or whether ABC Limited has done TCS collection or not. TDS payments, TCS collection, all that information, TDS deducted, deposited, shortfall, all that information is required to be given in clause 34A. And whether ABC Private Limited has filed TDS returns, TCS returns or not, that information is required to be given in clause 34B. Next, clause 34C, report interest liability. See, if you deduct TDS in the month of August, you should pay on or before 7th September. So whatever the TDS deducted, that will be required to be deposited on or before 7th of next month. So you have to identify whether TDS is deposited before due date. If TDS is not deposited, interest will be levied. Rate of interest is 1%. If TDS is not deducted, if TDS is deducted but not deposited, rate of interest is 1.5%. All that information is required to be given. Even interest liability calculation is required to be given in clause 34C. Next, clause 35, quantitative details. If you are into trading business, how much quantity of goods you have purchased, how much quantity of goods you have sold, that quantitative information is required to be given in clause 35. Under clause 36, you need to give this information about deemed dividend. We discussed 222E under income from other sources. Private limited company, if it gives any loan to the shareholder who is holding more than 10% shares, then whatever the loan given, it is also treated as deemed dividend. So after verifying books of accounts, if any such loan is given, those details are required to be given in clause 36. Okay. Next, clause 37. Whether cost audit is applicable to a company or not. If cost audit is applicable, whether cost audit is done or not, what are the observations of cost auditor? Okay, that information is required to be given in clause 37. Next, excise audit. Whether excise audit is applicable to a company or not. If so, whether excise audit is done or not, what are the observations of excise auditor? That is required to be given in clause 38. Next, under clause 40, we need to give financial ratios. We need to give a gross profit ratio, net profit ratio of current previous year as well as for previous year. You can see ratios for current year and last year, total turnover, GP ratio, NP ratio, stock in trade by turnover, materials consumed, finished goods produced. All this information is required to be given in clause 40. Next, demands and refunds. So if any income tax is payable, if any GST is payable, under any law, is there any demand or is there any refund received in current year? That information is required to be given in clause 41. Next, clause 42, whether SSC filed statement of financial transactions. See, there is one concept, filing of statement of financial transactions. So, there are certain persons, for example, bank is there. Bank should give information to income tax department. If anyone deposits more than 10 lakhs in one account, information should be given to income tax department. That information we call as statement of financial transactions. Whether SSC, okay, who is required to give statement of financial transactions? Did he give that SFT information or not? Whether he gave that information before due date or not, that information is required to be given in clause 42. Next, whenever transfer pricing provisions are applicable, whenever there are international transactions, country by country reporting is required. Whatever the information of country by country reporting is there, that is required to be given in clause 43. Next, clause 44, this is introduced after GST. Okay, there will be expenditure, right? You should give breakup of total expenditure. So out of total expenditure, how much amount you paid to registered GST dealer, how much amount you paid to composition dealer, how much expenditure you paid to unregistered dealer, all this information is required to be given in clause 44. Okay, so these are 44 clauses of form 3CD. Next, general tax points. If any clause is not applicable, auditor should clearly state not applicable. For example, I am doing audit of ABC Private Limited. Cost audit is not applicable to ABC Private Limited. Then for clause number 37, what I will write? I will write cost audit is not applicable. So out of 44 clauses, if any clause is not applicable, tax auditor should mention that clause is not applicable to the SSC. Next, overlapping income or expenditure. That means what? If any information is required to be given in two clauses, you can give information in one clause, same reference you can give in another clause. Okay. Differences of opinion. I am saying depreciation rate is 10%. SSC is saying depreciation rate is 15%. So if there is differences of opinion, tax auditor should give in the observations opinion of tax auditor and opinion of the SSC, and income tax department will take the decision. Next, incomplete or inaccurate information by SSC. I wanted to do tax audit, but SSC is not giving information. What to do? So if SSC is not giving information, that is to be properly disclosed in tax audit report. SSC is not giving information, I could not give proper tax audit report. That is to be clearly mentioned in the tax audit report. Next, reliance on case law. While doing tax audit, if you are relying on any judgment, court judgment, that court judgment is also required to be given in tax audit report. These are general tax points. Okay. Now you have listened this much, right? Now shall we see illustration 4 and illustration 5? Two questions are there. Shall we see them? Illustration 4 and 5. Illustration 4. XYZ Limited having TAN has made following payments during the year. Professional fees to Mr. X gross 1 lakh. TDS is deducted 10,000. Professional fees to Mr. Y. See, TDS is there. In which clause TDS details are required to be given? You can see clause number 34A, 34B. You have to give information of TAN, TDS deducted, deposited, shortfall, whether TDS TCS returns are filed or not. You should give in clause 34A and clause 34B. Okay. Professional fees to judge 40,000. It is more than 30,000 na. TDS is required to be deducted, but TDS was not deducted. This is to be reported in clause 34A. Payment made to Mr. Z 40,000 professional fees, TDS not deducted, not deposited to government. That information is to be given in clause 34A. Next, yearly rent 2 lakh. It is less than 2.4 lakhs, right? If you remember section 194I, threshold limit for payment of rent is 2,40,000. Here rent is less than 2 lakhs. So TDS is not required to be deducted. All the aforesaid transactions are related to 31st March 25. Company has paid the TDS being deducted by it on 25th April 25. TDS written in Form 26Q has been submitted by it on 10th May 2025. See, TDS deducted, TDS paid on 25th April. See, in March 25, if any TDS is deducted, due date is 30 April 25. So, when it was paid 25th April, so it is paid before due date. Paid before due date. And TDS written in Form 26Q. It is submitted on 10th May 25. For TDS return, due date is 31st May 25. So, TDS deposited before due date, TDS return is also filed before due date. Sir, do we have to remember all clauses? Try to remember the clauses, otherwise write as per 3CD information is required to be given. You need not mention the clause. Okay. To the extent possible, some are very important. I told clause 21, clause 31, clause 34. Okay, in clause 31, we will report about 269 SSST, 269T information. Okay. So you can read the answer. On 40,000 TDS was not deducted. If TDS is not deducted, how much is disallowed? If any payment is made to resident and TDS is not deducted, 30% is disallowed. 40,000 into 30%, how much? 12,000 is to be disallowed. Okay. So that is mentioned. And you can see in clause 34, we need to mention 194J, 194I, whether TDS is deducted or not. You can see PAN number of SSE, section under which TDS is deducted, required to be deducted. What is the nature of payment? Fees. That is mentioned here. How much is the payment? What is the amount of TDS? Whether TDS is deducted or not, all the information is required to be given. And I don't think so at this much level question will be asked. If it is asked, you need not write this table. This is given in the institute material. You can write plain answer. Okay. Amount paid is 2,90,000. TDS required to be deducted is 29,000. TDS actually deposited. TDS actually paid. In that way, you can write line by line information. You need not remember the table. You need not draw the table. Okay. Next, clause 21 I have told. In clause 21B, whether if TDS is required to be deducted and if TDS is not deducted, that information is required to be given. You can see on 40,000, TDS was not deducted. That is required to be deducted, 40,000. PAN of the payee, to whom amount is paid and their address. You have to give information of transaction where TDS is not deducted. Next, shall we see illustration 5? The following transactions are recorded in books of MSPL. On 1st April 24, loan taken from ABCL Maharashtra, PAN via RTGS. How loan was taken? Loan was taken from by RTGS. If loan is taken by RTGS, okay. Loan should not be taken in cash. If loan is taken in cash and amount of loan is more than 20,000, then 269 SS gets attracted. Here, loan is greater than 20,000, but loan is taken by way of RTGS. So, 269 SS will not get attracted. Even though 269 SS do not get attracted, whenever loan taken is more than 20,000, that information is required to be given in clause 31. Okay. Next, interest paid to ABCL via RTGS 2,25,000. Repayment of loan. This is relating to 269T, right? See, whenever loan taken is more than 20,000, whenever loan repaid is more than 20,000, 269SS, 269T provisions you have to check. In all those cases, Even though loan taken is in the form of bank, still you have to report the transaction. You have to report loan taken is more than 20,000, but it is not taken in cash, it is taken by way of bank transaction. 269 SS provisions are not applicable. In that way, you have to give the disclosure. Okay. Loan taken from ABCL via RTGS, interest credited, net of TDS. See here, TDS was deducted. As TDS was deducted, with regard to TDS, two clauses are there, clause 21 and clause 34. And with regard to loan, clause 31 is there. So you have to report under clause 21, clause 34 and clause 31. Those three clauses, in those three clauses, you have to report the information. You can see here, clause 31, whenever loan is taken and on interest TDS has been deducted, clause 34A, 34B, repaid the loan, clause 31C. So as per those clauses, you have to give the information. How much is the loan taken? From whom loan is taken? Maharashtra Bank. What is the PAN number? How much loan is taken? How it is taken? By way of RTGS. All this information is required to be given. You need not draw this table. You can write line by line. Amount of like 62 lakh 70,000 is taken from Maharashtra Bank. PAN number of Maharashtra Bank. It is taken by way of RTGS. PAN number of Maharashtra Bank. In that way, line by line, you can write the information. And whenever loan is repaid, okay, you need to write information of 269T. Okay, how much loan is repaid, to whom loan is repaid, PAN number of payee, and how loan is repaid, cash or bank. That information is required to be given. Okay. So this is all about tax audit. I hope you understood this concept. It's very important, I'm feeling, because tax audit, many like ICMA and many cost accountants want to do tax audit. So if they want to do tax audit, if cost accountants are to be given tax audit signature, they have to have sound knowledge about tax audit. That is the reason this chapter is introduced. So we can expect at least 7 to 9 marks from this chapter. Prepare carefully. Okay. Thank you very much. Thank you everyone. Okay. And like I kept lot of effort to develop this material and to explain you all this. More than 3 days it costed me. I have kept lot of efforts. So if you like this, please share with all your CMA friends also. Okay.